Good evening. This side, Rahul Magan here is a Group Chief Executive Officer, Treasury Consulting. As we speak, Treasury Consulting is a multinational headquartered group. We are based out Singapore and we are a multinational and a multi-asset hedge fund. And having said that, we cover majority of the asset classes. But like I did repeat it many a times, that we are a proprietary hedge fund. By proprietary, I mean to say we do not accept third party funds. So maybe you are a venture capitalist, probably a private equity firm, or whosoever, but we do not accept any third party funds. Today I got a very interesting document, from a foreign bank. You know that I worked as a corporate treasurer for American companies, and you name the bank I dealt with. And today I got one document from a foreign bank. In this, they wanted to deal covering BDI. Now, BDI stands Bank Debenture Instruments. Unfortunately, the definition of BDI, Bank Debenture Instrument, in this document is not correct. I don't say it is not correct, I should say it is not 100% correct. Guys, bank debenture instruments is amongst the most liquid instruments in the world of trading. Remember that. Even in 2022, when the world talks about high frequency trading, nano trading, robo advisory and whatnot, no one, I repeat, no one is aware that how much is the liquidity of bank debenture instruments. Now let me clarify what is a bank debenture instrument. Bank debenture instrument is an instrument which can only be issued by a top bank. Now when I say the top bank, I mean the top 5-6 bank like Goldman, JP and all. A normal bank whose share price is $3, $4, or probably a fraud ridden bank, or probably a very small bank. Unfortunately, in Europe, we have so many banks, I say so many banks, whereby the stock price is merely $2, $1, $2.50, like this. So please don't expect them to issue a bank debenture instrument. A bank debenture instrument, BDI, can only be issued by the top banks. Now, top banks generally issue bank debenture instrument in two ways. Number one, they issue for themselves, which is called their proprietary trading. All the top banks of the globe have their prop platforms, which is called market making. I already made a video on the YouTube that market making can be a great career for you, provided, I repeat, provided you do understand very well what the hell is market making. Secondly, these banks issue BDIs for their clients. So let's take a very simplistic example that today, any top bank of the globe they see an opportunity in gold. Let's take a simplistic example. They believe that gold is at around 1650 and they see a very wonderful opportunity that gold may touch 1800, but they need a capital to buy gold and hold it out. So they need a big capital to buy gold and hold it. So how would they get the capital? That's a big question. They have ample of resources to get the capital. But this gold trading, they are doing not for their customers, but they are doing for themselves, which is called prop trading. Now, the simplest way to accumulate capital is called bank debenture instrument. But there is a big catch, and the catch is in a bank debenture instrument, the bank is taking money from, of course, the third parties, outside investors like pension funds, like mutual funds, like financial institutions, probably high net worth individuals, probably family offices, and a lot of people. The bank who is taking the money should have a credit rating and should have a financial standing. Like I said, a bank who is a $2, $3, $4 bank, no one is going to give them a bank debenture instrument. Now, what happened? There is a very classic case in that. Once that big bank will raise a bank debenture instrument, you might be thinking that he would be holding it and utilizing the cash to buy the gold. Yes, they would do this, but in a relatively different way. And the beauty is called forfeiting. You must be thinking, what the hell is forfeiting and how come forfeiting come into the picture? So that big bank would forfeit this BDI to another bank using interbank markets. You know that interbank is the most liquid market we have in the world, be it forward contracts, long-term forward contract, option contracts, exotic option contracts, swaptions, cap, and whatnot. Everything is traded in interbank market. Now there is a problem, the big problem for investors, not for the bank. When that particular big bank issue the BDI, bank debenture instrument, he issue at a relatively very good discount, sometimes 10%, sometimes 20%, and sometimes more. But when it do the forfeiting, it will reduce the discount. So suppose you are issuing at 10%. The thing which worth 100, you issued at 90. And when you do the forfeiting, you do at 92, which means $2 profit. 90 plus 2, total 92. And a bank in the interbank who is going to buying this, he would further forfeit that. Slowly, 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 and steadily, it would reach to somebody who is known as exit buyer. I know that people do not understand these technical terms, but my YouTube channel speaks technical terms. Now, this exit buyer is generally in losses because something which is issued at relatively 90 or 10% discount, you can say, he means the exit buyer would be holding it at 98, which means only 2% profit. In terms of PPP, private placement programs, bank debenture instrument played a very important role. But like I said, bank debenture instrument can only be traded by the top banks. And more importantly, as a consultant, as a trader, as a platform, you need to learn how to handle bank debenture instrument. Valuation is a big issue. And more than that, don't expect them to be on Reuters or Bloomberg. That's the mess. This is Rahul Magan from Treasury Consulting Group. We'll talk soon.